Well, hello, everyone. My name is Brian Durheim with Ameritas, and I'm very excited for the opportunity to speak with all of you, kind of in prep for AEP and OEP for that matter, to talk about the Ameritas dental and vision plans. We were recently launched the Quote It platform, and so you can now access the PrimeStar plans on that platform and do quote enrollments right alongside your Medicare and your health or STM enrollments. And so this is a review of those plans, and we'll kind of, without further ado, jump into it. So here's a little background on Ameritas for those of you that maybe don't offer us or haven't heard before. Ameritas is a mutual company. They're kind of what I would define as like a medium-size carrier, top line revenue of $2.2 billion, so they're a good sized company, 2,500 employees. By no means are a United or an Aetna size, but much bigger than those that are focused on dental. Focus on dental is something that makes us pretty unique. We have three divisions: dental, life and DI, and retirement plans, but dental is our focus. Dental is the majority of our revenue from a company standpoint. And that's really unique in the individual space. Most of the individual carriers that are out there, their focus is with med sup or other more kind of ancillary health-related products. And with us being focused on dental, that really gives us a competitive advantage because we've got not only dental expertise in the space, and we've got a big system that's processing, from an administrative and claims standpoint, our $1.3 billion of dental claims. But furthermore, it also gives us a proprietary network. So the Ameritas network is really one of the biggest and best networks that are out there. And when you look at the individual space, it definitely is. We are the fourth largest group carrier for dental, and we're definitely a leader in the space on the individual side. So let's talk about different ways to incorporate dental. And this, to some degree, is tilted towards Medicare, but it really works for Medicare or STM, whatever you may be pushing. And now that I say that, the first tip probably doesn't work for STM because you're lucky enough that if you're selling on the under 65 side, you don't have to deal with scope of appointment. But for those of you that are on the Medicare side, if you're going to be selling MA or PDP, any CMS regulated product, you've got to get a scope. Now, what I would recommend if you are getting scopes for your meetings, whether those are verbal, scripted scopes, or whether it's a paper scope, is to have dental included in that scope. If you can use a scope of appointment form that's got dental included, one, it allows you to cross-sell that on the spot, but two, it also just kind of easily sets up the conversation. It's on there, they're going to initial next to dental, and so it allows you to kind of set up that conversation in a very nonchalant way to where they know they're going to be talking about dental. Another good thing to refer to is within the Medicare and You guidebook, page 49 is kind of your golden page. Page 49 talks about what's not covered. And to tie this into the under 65 side, in general, it's really good to talk about what's not covered because, one, I think when you're selling anything, it's good to be transparent about what is and what's not covered. What's the good and the bad of these plans that I'm talking about, regardless of what you're selling, whether we're talking about MedSup or whether we're talking about STM or an indemnity plan or an ACA plan. What is covered and what's not covered? When you're talking about what's not covered, the best thing to do is to give examples. When you give examples, it's much more memorable. So when you tell them, instead of saying like, hey, your outpatient is X, your copay for inpatient is Y, after you give them the facts, start giving them examples. So let them know, hey, you go to the hospital, let's say you have something serious and it's a $100,000 bill. With this plan, this is how it's going to work. And run through what is covered, what's not covered. Give them a sense of, hey, your drugs probably aren't going to be covered, or you're going to pay this for deductible and this is going to be your MOOP, right? Those sorts of things. When what that allows is you to start planting the seeds of additional cross-sell products, most notably dental and a fill-in on the health side, whether that's an accident plan or a hospital indemnity plan. So when you're talking about, hey, when you go to that hospital visit, if you want to, reduce some of your out-of-pocket expenses, get in an accident plan or a cancer, heart, stroke, or a hospital indemnity, whatever is the best for that situation, it's a great way to go about it. And then same thing on the dental side. You know, when you're talking about original Medicare, dental is not covered. When you're talking about STM, dental is not covered. Dental is one of the largest expenses that an insured is going to have outside of their traditional medical expenses. That's not going to be covered. And so using those opportunities to plant the seed while you're talking about the core product, whatever your core product is really important, because that's the way that you plant the seed, and that's the way that you can sell additional products like dental and like hospital indemnity and like accident plans without it being perceived as, oh, they're just trying to sell me a bunch of other products. Right? Now you're selling solutions. Now you're giving them real life examples of how this can be talked about. And you can take a package approach. And that is why we have so many agents at Ameritas that will sell dental every single time or close to, and they'll sell 50 apps a year maybe. And then we've got a ton of agents that only sell one or two. Those that take that approach of including and talking about what's not covered and bringing it up every single time and selling it like a package, those are the ones that are successful in cross-selling, whatever it may be. To kind of build on that further, really what you're talking about is you're talking about the good and the bad. You know, it's not just like, hey, good news. This plan is the best plan ever. You know, this plan F is the best insurance you could ever get. No out-of-pocket expenses. Or to flip to the under 65 side, this short-term plan is way better than that Obamacare. You don't want Obamacare. That's way too expensive. You want the short-term plan. It's a 3-year now. It used to only be 3 months. Now it's 3-year. You can get the NatGen, et cetera, et cetera, et cetera. It's a third of the cost, whatever your pitch may be. That's a great way to pitch those plans if your goal is only to sell those plans. But once again, I would implore you that as a salesperson for insurance, when you're trying to solve someone's insurance problems, they don't just want to know about the good, they also want to know about the bad. And use that bad, I use bad loosely, talk about what's not covered. Say like, hey, Medicare is very good at insurance. Medicare is probably going to be the best insurance you're going to have your entire life. But there are things that it doesn't cover. Or when you're talking about STM, you can say, hey, this insurance is much more affordable than the ACA, and there's many things about the ACA plans that are forced to be included in it that probably aren't relevant to you. But bottom line is though, there are going to be expenses that you're going to be responsible for with your deductible and your maximum out of pocket. We do got to get you through underwriting. It still doesn't include things like dental and vision. Use those opportunities to plant the seed so then you can come back after the fact. Let me show you the plans. The name of the kind of like the core Ameritas product, the branded Ameritas product that's out there is called PrimeStar. That's our branded plan. We do have a handful of private label plans that aren't branded with Ameritas that you may be familiar with or have seen, but this is kind of our main plan. It's available in all 50 states. There are some state specifics, but here's how the plan works. We give 100% coverage on the cleanings. That's 2 cleanings and exams per year. X-rays are covered at 100%. Day one, and the deductible is not applicable to preventative. It's a $50 deductible, but it's only for basic and major. Then from there, basic and major have day one benefits, so there's no waiting periods. Basic services are fillings and simple extractions. Major is essentially everything else. It includes implants, which is getting really big for those that are in their 50s or 60s or 70s. More and more of those age folks are getting implants done, so that's huge. Basic services are covered at 50% day one. Major services are covered at 15% day one. That's 1-5. And then, here's a great tip. Here'd be one to write down. Whenever I sold this plan, here's how I would sell it. Because the insurance company wants you to keep the insurance, but yet you don't have to, you can cancel at any time. Because they want you to keep it, they're going to incentivize you to keep it. The way that they do that is they're going to increase the benefits after you've held it through January 1st. So once it's January 1st, the benefits are going to go to 80% on basic and 50% on major. Your positioning and your wording is extremely important. Once you get the basics down of insurance, your wording is probably the number one thing that you could work on to go from good to great. It's the number one thing that could explode your personal book of business or your agency. It's the number one thing that's going to help you, sell instead of a handful of dental plans, a boatload of dental plans. So wording things like, hey, you're free to cancel at any time, but yet the insurance company wants to give you an incentive to keep it, so the benefits go up. sound a whole lot better than saying, hey, this is structured as a graded benefit plan design that's going to give you lower co-insurance at first, and then once you hold it for a while, it will increase. What sounds better, right? One thing that's unique to us is we do administer these on a calendar year basis, and so what that means is the policies that are effective anytime in 2018 will get a bump January 1st. The key is not when it's sold, the key is the effective date. And so to state it very explicitly, when you get towards the end of the year, do everything that you can to get that plan effective still in 2018, because then they just have to wait another week or two in late December to get that bump on January 1st. Wrapping things up here, as I already mentioned, the calendar year deductible is $50. The annual maximum is either $1,000 or $2,000. They can choose to buy how much insurance they want to buy. And then there's also child ortho benefits. Just like the major, it's 15% day one, 50% after January 1st, and that's a $1,000 benefit. So the one variable with that plan is the maximum. The second variable is the network. You can buy our plans as network plans or non-network plans, and we're kind of unique in this regard. We give full transparency to the difference between the two, and we let the clients pick how they want to utilize the benefits. So if they're going to go in network, you should sell them the network plan. The premiums are less. If they want to go out of network, they'd be much better off to buy the non-network plan. The premiums are more, but then they get the flexibility to go to any dentist. But the network's pretty large. Over 470,000 access points nationwide. Average discount is 32%. So that's where, with us being really a dental-focused company, that's where it really comes into play, because we've got a much larger network than what we did, say, like when I was at my old company, Security Life. Security Life is where I started these product lines with another gentleman about 7 years ago now. And we leased a network, Carrington. I'll just say it. It's, because there's nothing wrong with it. It's a good network for being a lease network. But the reality is they had about 200,000 access points, give or take, which is, about 2/5 of what Ameritas has. But it's not just the number of access points, it's kind of who you have in your provider directory and how many of your clients actually utilize it. And so our utilization was quite low back then. I think it was in the teens, if I remember correctly, like 15%. Only 15% of the people that had our dental plans actually utilized the network. And then you've got the discount, right? And if you've got a very skinny network, you can get a discount at like 40%, maybe 45%. But if you got a really wide network, you might only get a 5% discount. Delta, by way of example, their average discount with their Premier network, which is the really big one, is literally 0. With us, we're going to try to retain at least a 30% average discount. So it's a little bit of a teeter-totter in terms of how big the network is versus the discount, but we're going to strive to kind of get the best of both worlds in that regard. In terms of cost for care, a senior on average spends $1,154 per year. So for those of you who focus more on the Medicare space, that's a big deal. Let me give you a kind of an analytical number showings of the savings and the value that we can give your clients, and then we're going to go to vision. To me, dental all comes down to value. Why? Because the number one reason why agents usually don't sell dental is because they don't see value in it. The number one reason why clients don't buy dental is because they don't see value in it. So agents or clients or a combination of one influence and the other come to a determination of like, I don't know if I'm going to buy dental insurance. Instead of paying $40 a month, I might just hold on to that money and just pay for this out of pocket, right? That's the debate. Because everybody has dental care expenses. Everyone that buys a dental plan utilizes it. So the debate is are you better off with or without it? And when you've got a really low benefits, if you've got a carrier that you're partnered with that you're currently selling that, maybe they don't do 100% coverage on preventative, or maybe they have a waiting period on major, but yet they're still paying $40 a month for that plan, that's where you start to get into debate. And so that's why we focus on value, because we feel like if we can focus on value, then there's 100 million people in this country that don't have dental insurance. And if we're the ones that are focused on value, if we can get a sliver of those 100 million people that don't have dental, now we're growing the pie. There's, 500,000 insurance agents that are out there, and the majority of the independent agents still don't sell dental. So if we can get some of those guys, start selling dental, that's kind of our business approach. to the dental business. So sorry, that was a little bit of a tangent. Let's go back to the slide here. So value. Here are the numbers. Let's say you buy a crown. You need to get a crown. Call it the cash rate. If you don't have insurance and you're saying, I'm not going to spend the $40 or $35 a month, whatever dental plans cost, I'm just going to pay for my dental expenses out of my pocket. In Minneapolis, which is where I live and which is a pretty good median price point, in Minneapolis, a crown costs $1,227 on average. Some providers are going to be a little more expensive. Some providers are going to be a little bit less expensive. But on average, that's what a crown's going to cost you. Okay? With just our network discount, we can get that number down to $772. Remember, we're one of the largest group carriers out there. So we do have some leverage with the dentist to get negotiated rates. And then when you layer in the 15% insurance that we can give day one, and you can literally, when I say day one, it's literally that. You can start this plan tomorrow. The cost to the client's only $656, 47% savings. So think about that for a second. We have no waiting periods. Oh, by the way, I haven't mentioned, we have no pre-existing conditions. And so a client calls you up, they say, I need to get a dental plan. The bad news is the house is already on fire. So I need house insurance right now. You know, that the equivalent to that would be, hey, I need to get a dental plan because I need to get a crown, like tomorrow. Okay. I can save you almost about 50% on the crown tomorrow. How cool is that? There's no one that's going to do that. No one gives better value than that. And then, oh, by the way, if you can just hang tight till January 1st, the insurance goes up. Then instead of paying $1,200 for the crown, you'd only pay $386. That's a 69% savings on the crown. Translated into dollars, that's at $846 that you just saved your client that they would have spent anyways. The other thing to consider is the preventative services. This slide kind of compares us to lower benefit carriers. I'm not going to go down that route. What I want to talk about here is that the average cost for preventative care is $430 a year. That'd be another number I'd write down. I would talk about that. Tell them, you know, this is straight from our product team, from our actuaries. The average cost for preventative care in this country is $430 underneath the assumption that they go get 2 cleanings a year. So if they're going to spend $430 a year anyways, and you've got a dental plan through Ameritas that's something less than $40, it'd have to be around $37, $38. They're money ahead, or at least break even, with buying a dental plan for $37 a month instead of paying for that $430 out of pocket. And then, oh, by the way, if a filling or something bigger like a root canal or, you know, wisdom teeth need to get taken out, or God forbid a $5,000 implant comes about, then they've got insurance. They're going to be happy to have it. But $430, that's a good number to write down because that's how much they're going to spend anyways on preventative care on average. Let's go into vision. We'll wrap up with vision. And then I typically will show the enrollment link process, but because this is kind of geared towards those of you that use Quote It, that's you can still use our standard enrollment link process. And if you've got questions, on how that works, feel free to give us a call here at Ameritas. I'll show our contact info at the end. But I'm going to run through the vision, then I want to run through your questions. So if you've got questions as I've talked through the dental, or as I go through this vision here, send those to me in the question forms, and we'll run through all the questions here. Vision, we've got the 2 big networks. The 2 big networks are IMED and VSP, and between those 2 networks, you literally have 99% of the eye doctors that are out there. IMED has all the big retailers like LensCrafters, ProVision, Target. The IMED plan's $10.67 a month. The eye exams are available once per year. The glasses are available every 2 years. But the first pair of glasses are available right away. So there's no waiting periods, just like the dental. If you think about a typical visit to the eye doctor, the first thing that they do is they check your eyes, right? They give you an eye exam. So typically you'd pay $75 to $100 out of pocket for that eye exam. With the IMED plan, you're going to just pay a copay of $25. Then, while your eyes are all dilated and you're still kind of foggy, they're going to have you go pick up some frames while they're working on your lenses. The frames, you're going to get an allowance of $130. You can buy anything on the wall up to $130. If you want to spend more, you can. You just pay the difference. And last but not least, you're going to sit down with the associate, and they're going to start going through what kind of frame, what kind of lenses that you need, whether you need single lenses or bifocal lenses or trifocal lenses. Regardless of which type of lens that you need in that regard, it's going to be a $25 copay. Those lenses are usually about $100. And then last but not least, what's not on the screen is then they're going to go into their sales pitch about how you need all these various lens enhancements, like they get progressive lenses with the no line bifocal. My wife just recently got glasses, and she was telling me about how she needed in air quotes. I realize you can't see me right now. She needed to get UV tint apparently, or like a UV coat. No, it's like a UV coating. And I'm like, for like the sun, and apparently it's more for like the screens, like computers in that regard. And sure enough, there's lens enhancements that are out there, and we cover those lens enhancements. I don't have them on this PowerPoint slide, but there's a big long list of various lens enhancements that exist, and there's a schedule of copays. And so all of them would be covered, just depends on what the copay is. VSP. VSP is the other big network. VSP works with the vast majority of the independent eye doctors. So it's very likely that if they go to Dr. Johnson down on Main Street, especially in these small towns, that's where they're most prevalent, that doctor is a part of VSP. From a larger retailer standpoint, VSP does have Costco, which is a big one. Costco is the fastest growing retailer for vision, for frames, I should say. And then they also have ProVision, which is kind of interesting. ProVision is the first retailer to be in both networks. The VSP rate is $16.34, so it's a little bit more expensive, but the benefits are richer. The copay on the eye exam is only $10. The frame allowance is a little bit higher, it's $150. And then the lenses copay is $20. So lower copays, higher allowance. But really, this isn't a benefits and rates conversation. It's when you're selling the dental, or when you're selling the health, or when you're selling the Medicare, just asking them, do you wear glasses? Oh, you do? Or if you're with them face to face, you'll obviously see if they've got glasses on or not. And if they do, they're money ahead to buy a vision plan. From there, ask them, where do you go for your glasses? And if they tell you Target or Pearl Vision, you should probably get them the iMed plan. They tell you Dr. Johnson on Main Street, it's probably going to be in network with the VSP plan. So it's just much more about where they utilize their benefits. Kind of like the dental, what I wanted to do is I wanted to run through the numbers. That probably inclines you to help you understand. I'm a little bit analytical at fault to some degree for being a sales rep. So when you look at the numbers, let's say someone's going to go get an eye exam and contacts. So when you get contacts, you need to get the fit and follow up and then the lenses themselves. With the iMed product, so the retail pricing on those three procedures is $515. But with the iMed product, it's only $175. And then I said, well, wait, but they're going to pay for the insurance, right? $175 is their out-of-pocket expenses due to the copays and due to the fact that we give a $130 allowance on those contact lenses, but those contact lenses came up to $220. So $175 is the out-of-pocket expenses that they're going to pay at the retailer instead of paying $515. But they're paying for the insurance. So when you add up that $10.67 a month, you're going to pay for that for 12 months. That comes up to $128. So even when you factor in the insurance, the savings to the client in that example is still over $200, $212. And then let's say they get the VSP plan. And just for sake of kind of, showing a different example, let's say that they're going to get glasses. So they get an eye exam, they get the lenses, they get the UV coating just like what my wife got. They got the scratch coating, and they got the frames. Frames were $191 underneath this assumption. They would have paid, if they just paid cash, they would have paid $470. But their out-of-pocket expenses with the VSP product is only $80. And then when you add in the VSP insurance premium that they're going to be paying, that on an annualized basis, that comes out to $196. They're saving $194 by buying the insurance instead of paying cash. Sometimes when I show this slide, especially when I'm live, when I'm face-to-face with you, what agents will interrupt me and say here is they'll say, well, if you're money ahead with vision, how can you guys offer vision? You want to make a profit, don't you? Are you losing a bunch of money or what? The answer is how can we offer vision insurance, which is a very strictly what I would call a utilizer product. The benefits are the benefits. It's not like they can have a $5,000 implant with dental, right, where there's some catastrophic component. They can only get $150 for the frame allowance. The copays are the copays, right? How can we offer the benefits and still have them be money ahead? Well, the first small answer that I'll just have as a side note is network helps. Having networks of IMED and VSP does give us a little bit better pricing than what the cash pricing these doctors are going to offer. But really, the real answer is, from an insurance standpoint, is utilization. What I'm saying there, more simply said, is even though this is individual insurance, not 100% of our policies on the vision side are utilized. We have people that pay vision premium and they don't utilize the benefits. Maybe they don't get new glasses. Maybe they only get an eye exam. Maybe they don't get anything at all, but for whatever reason, they keep paying for those benefits. And so because we don't have 100% utilization, that allows us, and that's a long-term trend, that's not over the last year or two, that's over the last 20, 30, 40 years of vision insurance. That allows us to, price the plans or build up the benefits in a way that, if your clients are the clients that actually utilize them, they could be money ahead. So in terms of kind of getting started, if you're not appointed with us already, I would encourage you to do so. You can get appointed. For those of you that are with Quote-It or leverage or are on the Quote-It platform, you can go on to Quote-It and there's a landing page for Ameritas, and we've got all the links right inside of that Quote-It platform to get appointed with us, which is really nice. The appointment process is usually about 24 to 48 hours, and then we are going to send you an email with your agent ID. What you're going to do is you're going to go into the profile of within the Quote-It platform. You're going to go into your own agent or advisor profile, and where you put in your agent IDs for the various carriers, you're going to take that agent ID that we generate for you, and you're going to enter that into the Quote-It system. They're going to save that Ameritas agent ID, and now you're going to turn on the Ameritas plans, and now the PrimeStar plans will populate, and then you can send us, enrollments through the Quote-It platform. So we've got full integration in that regard, which makes it really kind of streamlined. From there, what happens is once we process the enrollments, there's a confirmation emails that do get kicked out. And then from there, it's all automated, which is really nice. So what I mean by that is there's a nightly batch, there's a daily feed that goes from Quote-It to Ameritas' directly admin system. So we're not touching any of these. So if your client calls up the next morning, inquiring on the policy for whatever reason, we're going to find Mrs. Jones in the system. No issues there. Furthermore, all the fulfillment is automated. So the admin system has a straight feed into the fulfillment printing center that we've got in-house. So, the ID cards, the certificate, everything like that, all that automatically gets sent out. We do 500 to 600 daily applications outside of open enrollment, during the slow season per se. We don't touch one of them. There's no humans that are touching any of these plans, and that's kind of a big key for our service success is we try to automate things as much as possible. So kind of in summary, what have we talked about? We've talked a lot about kind of value, but in general, it's got to be simple. So we really focus on simplicity with our products. To have value, you have to have scale and you have to have your own network. And in my opinion, we've got the best network. We don't have the largest. Delta has the largest network. But if you've got the largest network with the 0% discount, who cares? So what value is that to your customers? So when you factor in how big the network is with also the discounts, my opinion, I think it's kind of bar none, we've got the best network. We try to make it quick and easy. We focus a lot on our own enrollment tool. And for those of you that are already appointed with Ameritas, you're probably familiar with that. But it's not just about being quick and easy and building our own enrollment tool. It's also about being where you, the agent, is already at. And that's a big reason why we wanted to partner with Quote-It. Quote-It being one of the leaders in the space from a technology platform standpoint. We knew that a certain amount of agents were already looking and enrolling their clients into various health or Medicare plans on the Quote-It platform. And so if we can integrate with Quote-It like we've done from a technology standpoint to make it quick and easy to where you don't have to get off Quote-It's website to come to ours, but you can just directly do a single shopping cart experience all within one, that's easier for you. And so that's ultimately why we invested the time to work with Quote-It to do that. And last but not least, it still needs to be automated. It still needs to be maintenance free. So then that way the service is minimal on your end, and that's our intention, and that's what we've built. And that's why I'm so excited that, not only you guys took the time here today, but we've also integrated with Quoted. I think it's going to be a really, really good partnership, and I think it ultimately is going to benefit you, the agents, because it's simpler for you. If you're not hopping around all these different carrier websites, and it's also going to benefit your clients too. If you've got, questions that you don't want to address now, but you want to reach out, my contact info is up there. I'm the regional managing director at Ameritas. I'm responsible for the Quoted partnership and the NatGen distributors. And then we've also got an internal team, the Sales Connect team. The Sales Connect team, they're awesome. They know this stuff inside and out, many times better than I do. So they're product experts. They are our agent services team, for lack of a better label. And so if you're trying to do an enrollment and you've got specific product questions or what have you, feel free to reach out to them. They can help too. So with that, thank you so much, everyone. Have a great day. Have a great open enrollment. And if I can help further, my info is on the screen. Take care.